What's up, guys? Sam here, and I'll be doing the free video for Friday, November 1st, 2024. So, as usual, just finished making the premium video for the folks in the central room, and it was a quick one because all I think we needed to really look at was a couple of signals, and then next week is quite a large catalyst. You actually have two of them. You'll have an election, and you'll have a Fed meeting. So you'll have absolute resolution on the Fed meeting. I'm not sure about resolution on the election stuff though. So we'll see how that lines up. But again, news is just a catalyst. It just accelerates the technical patterns that we like to talk about. So let's talk about them. So let's start here with SPY. Last week when we were looking at SPY, I told you guys that things superficially, kind of on the surface, looked better than I think they were. Last week, the SPY daily was a max bull 50, and today it's going to go down all the way down to a neutral 4. So it's lost tons of energy here has been lost just this week. The weekly chart remains extremely bullish, but here's the issue. You see how you have 3 extreme readings right here? The 2 to pay attention to are the extreme plus and the extreme here. And the way that I've been describing this to the folks in the main room is think of it like a spinning top, right? So you have a spinning top, it's spinning really, really quickly, and it's very stable because it's spinning very quickly. If you were going to bet on when the top falls over, do you need to see the top fall over before you're pretty sure that it will fall over? Or does the spinning top, is it pretty much guaranteed to fall over once it loses momentum? And it's pretty much guaranteed to lose to fall over once it loses momentum, right? Once the spinning top starts to wobble, it starts to become an issue. So when you have readings like this, extreme and extreme here, it basically means that the top has to keep spinning faster and faster to kind of justify those levels. They are pretty rare to get those. If we look inside of the weekly, which is the daily, this top is not spinning faster, it's slowing down, right? That's why it's dropped all the way from a 50 to a 4, and now you have a couple of arrows pointing against the grain here, and frankly a lower weekly close. So that's number one, right? Number one is just basically a continuation of what we looked at last week, where I told you that the market on the surface looked better than it actually seemed to be under the hood. And then if we look at something like HYG, which again is something we looked at last week, this did not improve this week, right? If anything, it's just developing a very strong topping looking pattern to my eye, right? This is kind of, at least for now, it's kind of a textbook topping pattern, right? This entire structure here is not it's an ominous signal, to say the least, and it is a bearish chart, as you can see by the scores. So we're not getting any help there from the bond market, which had been helping a lot on the way up. So that's an issue. And then lastly, if we look at something like the volatility, but instead of looking at VIX, we'll look at VVIX, which is something that will move before the VIX moves. This is giving us strong bull ratings on both the weekly and the daily. And that's an issue. And the reason that's an issue is because when this thing decides to pop, keep in mind how this works. The VVIX, which is what we're looking at, will lead the VIX, and then the VIX, of course, if it pops off, it's a sign of usually it's a sign of exacerbated fear in the market. And you kind of have this kind of rounding structure here with a green cloud underneath you, right? You see how the cloud went green here, and it's been acting as support. Also on the daily chart, kind of a weak green cloud, but it is green. And the potential that this could actually start to hook here is quite high, right? So what does it all mean? Well, if you watched last week's video, it's basically just the next step from that. Last week I told you that the market looked really bullish, and I think if you just look at the daily chart, you're going to get a more bullish picture than it actually was. We looked at HYG. It was in weak condition last week, and it's in a weaker condition this week. We looked at the volatility last week, and it was in a strong condition, and it's in a stronger condition this week. And the wildly overbought SPY, as measured by the extreme labels on the weekly chart that I showed you, is losing momentum from the inside out. right? So we'll see how things line up. Of course, having two massive catalysts on the horizon here next week, Tuesday and Wednesday. Anything goes. We can come back next week and things could look completely different. But looking at the lay of the land as it is going into next week, I would continue to say the same thing, and that is I don't see an advantage here in swing trading anything, personally. And when there's no advantage in swing trading, then the advantage is in shorter term trading. And I'll just keep doing that until things align. If things continue to deteriorate, eventually they'll align in a bearish way, and we can swing trade in that direction. In the event that things start to align back to the upside, we start to see the VIX cool off, we start to see the HYG stabilize, we start to see some of the momentum return back into SPY, then we can go back to swing trading that direction as well. So I'm not reading too much into the seasonality here. I know that seasonality, the November to about, April is one of the best times of the year, especially November and December. I'm not reading too much into that. I have to just go with what I see directly in front of me. And what I see directly in front of me is actually has the potential to be quite dangerous. So it's only dangerous if you let it be, right? Keep in mind that volatility is not your enemy. As a trader, volatility is your friend, but only if you allow it to be. So that's the approach that I'm going to take into next week. All right, folks, that's my time. Leave us a like, leave us a comment before you go somewhere else on the YouTube. It does help us, even if it's just to tell us what you're having for dinner or your dog or cat's name. We do appreciate it, and I'll catch up with you guys next week. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.